You enter off a fair value gap, but it sweeps liquidity, or you wait for a liquidity sweep, but price reacts off a fair value gap. Where should you enter from, and how to know which scenario is more probable? This is what we'll discuss in this video. I'll show you a protocol, very easy to understand, but is very effective in the charts. You'll know when fair value gaps and other PD arrays will be respected and when not, as well as reasoning behind it. Make sure to like and share this video. Let's get into it. So this is the question that you might be having. Oh, I enter of a fair value gap, but then price decided to go to where? To the liquidity level, right? So you see fair value gap here, and price gave a reaction, started going higher, but then what happened? It went to the liquidity level, it sweeps the low, started going up. But in other scenarios, for example here, we can see that price respect that fair value gap started going up. So you have this question, and this is a question that I used to have when I started learning ICT, right? So I had this question, but I had nobody answering this question. So I was asking, oh, how do I know when I enter off a PD array or when I wait for a liquidity level? And then, I did not find that answer. So that's why I'm answering this question here today. And hopefully it helps some of the people that are starting learning and not finding the answer to this question. So the first thing to consider, so I'm going to go over some reasonings, over some things to follow. Then I'll give you that simple protocol. So just a simple step to determine, oh, are we going for the high or the low, or are we going for the fair value gap? And then I'm going to give you more reasonings and more confluences to look for. So I'm going to start with this. This is just an overall thing to look for. Then we're going to go over the protocol. So in any market, right, price goes into a consolidation or bullish or bearish order flow. Now, in a bullish order flow, when price is going up, right, and it's mitigating, bullish PD arrays, what I want to see is this, and this is what's going to happen. So in a bullish, what is going to happen is price is going to take lows, displaces above highs, and then it's going to create lows, displaces above highs. So in this case, when I have a bullish order flow, I want to be looking at those lows that are not mitigated. So you see, we have a fair value gap below here, and we have a low here. I want to look for a sweep at that low because we have another fair value gap below here. So in a bullish order flow, price is going to take lows, sweep lows, and run highs and displaces above them. You see, sweeping a low and closing above a high. So when we are determining the order flow, it's going to help us where to look for the liquidity sweep and where to look for the displacement above highs. So you see, so when talking about highs, we have a displacement above them, high a displacement, lows, we only have sweeps. So that's the thing, but there is more into it. Now, let's go to the chart, and this is the current price action in euro dollar, right? And I want to show you one thing. So you see, sometimes what happened is price actually respecting fair value gaps, and in other times it's not respecting. And what is the thing that's going to determine this? It's a very simple thing. Now let's take a look at this London session price action here, and then the New York one. What happened? Price was going up, right? So it was reacting, I guess, from, let's say, this Asian session. There was a point that is very strong in the Asian session, which is from here to here. What is this? 50% of the range of the Asian session. So you see, that's where price reacted from, started going higher, and we had those two consecutive fair value gaps here. So on the higher time frame, you remember two fair value gaps on a lower time frame are one fair value gap on a higher time frame. So price decided to react from here, started going higher. What happened here is we created this fair value gap, we started going higher. So what happened here is we displaces above this high right here, as well as this high. So that was the Asian high, and we displaces above. When we have a displacement above a point, what we're expecting is that fair value gap to be respected. So you see what happened after is price actually come into that fair value gap, started going up. But why those levels here were swept? The first reason is that those are inducement. So we always look at fair value gaps that has highs above them and did not fill the fair value gap. Those fair value gaps are going to be respected with price sweeping lows inside of it, right? So you see those lows, since we have a fair value gap below it that was unfilled, most of the time those are inducement. Anyone who entered here is going to be swept later, and then the real move is going to happen after. So that's one of the reasons. But then another reason, and that's what I wanted to discuss today, actually just looking at this without looking at inducement for now, we have this fair value gap followed by displacement. I'm expecting this fair value gap to be respected. However, when taking a look at this, let's say we started going higher from here, sweeping, and then we did not displace above this high, right? So price started going higher from here, was not able to displace above this high. And what happened here, even if it's a small body closure, but still not able to displace above because this is 15 minutes. If we switch to 5 minutes, it might not be just a week. It might be a body closure above, but it's a small one, so it still doesn't count. But what we see here is that we have this fair value gap right here, and we have another one above. So there are some people who are going to enter of those fair value gaps, for example here, and then price decided to sweep the low. What is the reason behind this? It's a very simple thing. Before that, let me show you what are we expecting, right? So we have prices going up, coming lower, and then going up just like this, coming lower. In this price action leg here, if we have one fair value gap and let's say two fair value gaps, for example, and then price decided to come lower to those fair value gaps, what we need to do first is look to the left, look for a previous high and see if that high was displaced above or no. You see, this here is not a displacement. Price decided to sweep that high, started coming lower. When we have a sweep, it's more probable that those fair value gaps are not going to work and price is going to go to the low that caused this high. So you see, this high was caused by this low and there was no displacement here. It means that most of the time it's going to go to that low, right? And you could do the same, but upside down on a bearish example, or actually bullish example. So this is what happened here. This is a bearish example here. Price started going lower. What happened? Now we ask this question. Did we displace above that high? Not really. What I'm expecting for those fair value gaps not to work. And that's why price decided to hit where? To this level of liquidity. Actually, this is the low that caused the high and it was only swept below. Now, we also asked this question. Did we have a sweep or, the first question is, do we have a fair value gap on that dealing range? Yes, we have this one right here. So we have a fair value gap and you see there was a reaction of that fair value gap. But the question is, did we displace below that low, right? So you see this low? Did we have a displacement below? Not really. Then what I'm expecting for this fair value gap to be inverse. And you see, we closed above it, we came back to it. And where do we go now? To the high that caused that low. You see, what happened here is we took that high again, but then we displaced above it. So now I'm expecting this fair value gap to work now. And that's what happened. So you see one simple step, which is determining if we have displacement or not. And there you go. We have displacement here. Price decided to come to the fair value gap and respect it. But then the same thing here. So this is on the New York session now. And we have this high and we had no fair value gap here. But if you go to the lower time frame, you could find one. But now let's apply this the same way, right? So we have no fair value gap, but maybe on the lower time frame there is. Price did not displace above the high. What this means is that we are hitting to the low instead of any PD array in here. So instead of looking for this order block, for example, what I'm looking for is the price to take the low. And you see, price decided to try again to take the high or displace above the high, but was not able to. Only a sweep of liquidity. What I'm expecting now is for this low to be taken as well as this low to be taken. And that's what happened. Now you see, this is April 19th. We're going to go to 18th. But 17th has a very nice example. What we see here happening is that we went below the Asian session, right? And then we had few body closures, but below this low, we had no displacement at all. So below this low, we had no displacement at all. What this tells me is that, okay, I could enter from here long, and what can I target? The high that is responsible for this low, and which is, we go up, it's this one as well as the Asian high. And that's where price goes to and reacted from, right? And then what happened after, we did not displace above, we started going lower, came to a fair value gap, started going higher, and that's your displacement here. You see, we had a displacement above that high. So what is this telling me now is that, okay, we have a displacement above a high with a fair value gap. Most likely this fair value gap would be respected. And what we see here, that's actually a respective fair value gap, started going higher. Now inside of this fair value gap, what do we see? We had this high, we failed to displace above here, actually creating equal highs. Then we take that high and fail to displace clearly. This is a very clear way that it's not able to displace. Then we ask ourselves this question, where is the fuel in the market? It's actually the low that is responsible for creating this high as well as this one, both of those, because it was creating equal highs here. So you see this high, where's the low of the structure? Is this one. Now we see we did not displace below this low. We took it, did not displace. We were inside of a fair value gap. What happened after is, after some time actually here, we did not displace. And then we tried again to displace, but couldn't. Then price started going higher. And again, what happened here is sweeping that high. When we're sweeping that high, what do we have in mind? Okay, the displacement thing. If we did not displace above, it means that we're going to the low that was responsible for that. And where was the low? Actually, there is a fair value gap here that was also inversed. So you see reaction, but then inversed, but then price decided to go to where? To the low. There you go. So that's a low taken because we're not able to displace below. And now what is this telling me is that, okay, I'll be looking for the high responsible for that low. And where is it? It's this one. So you see this way of determining the fair value gaps and the liquidity levels and which one to go with. It's actually, first of all, giving me a short-term bias. Second thing, it's giving me some scalping setup, scalping opportunities, and it's telling me where the real breakout is going to be, where the real structure is going to be. So you see, taking this low, I'm targeting this high now. And we took that high and we started to displace above. Now with this displacement, I'll be looking for those fair value gaps to work, most of them. You see, we had this fair value gap here. It worked. We started going higher. We also had this fair value gap with an inducement inside, and it gave a nice reaction going up, right? So this is the way to determine if I'm entering from a fair value gap or I'm waiting for a liquidity sweep. It's all based on what? Displacement. And actually displacement is liquidity. So in short words, I would say it all depends on liquidity, but going in details, it's all about liquidity and displacement. So a displacement above a liquidity level, it means that we're continuing in that direction. Price being so weak inside of that liquidity level or not able to displace above or below that level, it means that we are reversing and going to the other structure, the low or the high that was responsible for that structure, right? The same as we're seeing here. And this is happening all the time. All the time. So you see, not able to displace above this high, we go to the low, right? And also the same thing here. We're not able to displace above this high, we go to the low, we sweep the low. And it happens over and over, over and over. You see, not able to displace below the Asian low. What happened is we go and take this high here. Now, sometime you're going to see that we're not able to displace, price started going lower, but then displaces after without taking the high. And that's a scenario that happens, but it's not going to be every time. Okay. So this scenario happens, but the most scenario that we can trust is not taking the high, then we're going to the low, not taking the low, we're going to the high. Okay. Or not displacing actually below the low, we're going to the high. That's the thing. That's what happened all the time. All the time we're going to notice this. And even with a short-term move. So for example, this low, not able to displace, we go to the high. There you go. And not able to displace above the high, it means we're going lower, but eventually this fair value gap, and we had a sweep at this low coming into a fair value gap, but then price eventually started to respect that fair value gap. And what we see here is that we had a clear displacement above this. That's why this fair value gap worked here, right? And we started going higher. And this fair value gap had also an inducement here. So now we're going to be discussing the reasoning behind why this happened. So if we take a look at this chart, right, we have price going up, coming lower, sweeping that liquidity and coming lower. When we have a fair value gap created here, and then prior to that fair value gap created, what we had is a liquidity sweep. So we created that fair value gap, and then we had a liquidity sweep here. The probability of that fair value gap by itself, based on the inverse fair value gap setup that I shared, is now very low probability, right? And also if we are reacting off a fair value gap, another one on the higher time frame. So what happened here, especially if we are against the order flow, this is going to be disrespected. And when we have a fair value gap that is disrespected, but based on the protocol that I give, we're expecting this even before it happened. But then when we inverse that fair value gap, either go into another fair value gap and maybe reacting off that, or taking the low. And most of the time we are taking that low. That's one of the reasoning. So it's all based on the fair value gaps and the inverse fair value gap, and all based on the liquidity. So liquidity sweeps determine if we are having a fair value gap or if we're having another sweep. So that's one thing. Now another thing is that there is a fair value gap that is below that low. So if we have, even if we create another fair value gap, that's going to be used as a manipulation. If we have another fair value gap that is below here, so if we have the main fair value gap not filled and we created a high, and in this price action leg, we created another fair value gap. A lot of people just look at the recent price action here to enter off the last fair value gap, and they don't look at anything else. And even if we had a small displacement above, what's going to happen is a small reaction from here, manipulation, going lower, taking that low inside of the main fair value gap, then the real move starts. So when we have a fair value gap that is either unfilled or partially filled, and then there is a high above it or low below it, we're going to be looking for that fair value gap to be respected, and those lows and any fair value gap inside of that range is to be disrespected. Now another scenario is price going up, coming lower, going up, and either displaces above or not displace above. Or let's say, we did not take that high yet, but inside of this range, we had a big fair value gap. Now, remember that what I do is not validate any fair value gap without a liquidity sweep, and the opposite is also true. So no liquidity sweep is valid unless it's into a fair value gap. So if I have this price action leg from here to here, and there is no major inducement here, then know that the major inducement would be 1, which is the low in here. So what's going to happen, because we have no major inducement here, what does that mean? If I had, on the other hand, something like this, so price is going up, coming lower, going up, and as it's going up, it created a low and it started going up. Now in this case, what could happen, even if we don't displace above, we have a major inducement that is right here. So what could happen is that price is not going to take this low, but take this low because it's closer to the current price action. So it's not going to be good for price to reverse all the way there to go up. You could just go here to the nearest, for example, gas station, because if you have a car, you have no fuel, you don't need to go all the way there to this gas station. You can go to this one. So what's going to happen is price come into this low, which is a major inducement, and then go up. On the other hand, if we have no major inducement here, right? So if we have no major inducement here and we're just going up in one price action leg, the nearest inducement now is going to be actually this low, which is this one right here, which is the low of the structure. And that's why sometimes we go to the low. That's why sometimes we go to the fair value gap. That's one of the reasoning, is that the price action leg that we're having, it has no major inducement, which now the low of the structure is the real inducement, especially if there is a fair value gap below it. So try to follow this, try to look for all those stuff. At the same time, I actually have a video about smart money concepts traps, some of the traps that you're falling into and you're making those mistakes. So make sure to also watch that video. This is it for the video. Hopefully you guys learned something new and improved. Even with 1% improvement, that's a big one. So I really wish you the best. Make sure to like, share, and comment in the video. This is Molham, and I'll see you in the next video.